We're chatting about the conservative fund of funds, which one would assume is all about capital preservation, something that is potentially much needed in the volatile environment that we are currently navigating. Would that be a fair assessment of the philosophy behind the conservative fund of funds?
That's correct, Bronwyn. Our conservative fund of funds is our flagship fund at Quantum Asset Management. We use it a lot for clients who have been retired for a while or are retiring, but still need that absolute return and a return above inflation to keep up with their income and their growing income needs. However, markets are currently very volatile. There's a lot of uncertainty, and absolute returns are crucial in this environment.
Just looking at your asset allocation, this was at the end of July. We had South African cash sitting at some 31%.
Yes.
We were chatting off air just a moment ago, and you said you have deployed some of that cash to up your equity holding. I'm assuming you did that at around about the 28,000 point level on the JSE All Share.
Yes, we are of the view that cash are currently offering very low yields on a real basis. I mean, inflation is close to 5.3%, cash is returning 5.5%, so that's a 0% real return. However, you do need cash to have on hand to deploy in markets when there are opportunities. And we did actually during August increase our equity exposure on all of our funds, as well as the balanced mandate, the Coronation Capital Plus Fund, which do have quite a high allocation to equities and to global markets as well. So it is important to always have some cash on hand to actually have to utilize.
How significant is your equity allocation increase from the 28% at the end of July?
I think it was about 3 or 4%, if I'm correct. So we can actually only go to 40% equities in this fund, as it's in the low equity asset allocation category. So 40% is our maximum, and we are around about 40% equities currently.
This sounds pretty much, Kevin, what Kimon put on the table a minute ago, saying that his equity allocation currently between 40 and 45%.
Yeah, I don't think we should be on any doubts. This is a very difficult environment, and the terrain is difficult to navigate, and so caution is advised. I'm just looking at some of the funds that you do have a holding in. What are the key characteristics that you look for when you're choosing a fund manager to take some of your capital?
Well, first and foremost, we believe in diversification. True diversification can offer benefit to investors, and that's why we utilize a fund of funds approach. So when we look at fund managers, we don't look at them in isolation. We look at them on a portfolio basis as a whole and what they can contribute to the whole of the portfolio. So we look for managers with uncorrelated returns in the market, in their specific asset class, as well as in the whole environment in South Africa. We use the Metropolitan Income Plus, for example, which follow a bit of a different strategy, utilizing some derivative strategies. So we believe that can add significant value together with your normal equity and fixed interest exposures. So we also prefer managers with a value bias, so you'll find a lot of investing value in our fund. Rainmaker, which do also prefer a more value approach, although they are a bit more active, so that complements John's style again.
So would an underlying
John
philosophy...
That's
John
correct,
McCarthy.
yes, John McCarthy.
The rock star.
Would an underlying philosophy then that you don't just diversify among asset classes, but you diversify among fund managers as well?
That's correct, yes. So no manager can be on top all of the time. We've seen that in history. So, and we don't try and predict which manager is going to be on top the next 12 months. That's an impossible task to do. So we try and find managers that have proven to have skill, and then also managers with complementing strategies. That's very important, because you can't just have a bunch of value guys in your fund. You need to have more active managers with a more passive style, so that they can complement each other and we can produce a smoother return profile for our clients.
Your top holding from an equity perspective, Anglo American.
Yes.
That's also in line with potentially what value managers are seeing out there, that Anglo American is the preferred buy over BHP Billiton, given BHP Billiton's outperformance over the last little while.
Yes, Anglo is definitely trading on very attractive valuations. We do agree with all of the managers. Net Group Rainmaker's got a big holding in Anglo American, even Investec Value, which hasn't had a lot of resources in the recent past. He has increased his allocation to Anglo American. If you strip out the Kumba iron ore and the platinum holdings, I mean the bulk of the rest of the Anglo assets are trading on a PE of around about 4 forward PE. Now that is just too cheap to not buy at this stage. So we are very happy to have managers who hold Anglo-American, and we believe there's substantial upside. Commodity prices hasn't come back that much, and it's reflected in the Anglo-American share price, that significantly lower commodity prices.
Kevin?
And just some of the other stocks that you're holding. I see MTN features in British American Tobacco. Is that for the dividend yield?
That's correct, yes. We prefer managers who don't have a specific, very strong view currently, but who also have a diversified portfolio with some stocks that are very cheap, like more of your cyclical stocks like an Anglo-American, but then together with that, your more defensive holdings like a BAT, which continue to grow earnings despite the environment that they operate in, and MTN, which have got emerging market exposure, which is critical to us at this stage as well. Plus then they're starting to pay a handsome dividend, and we believe that it's going to continue.
The other question that I put to Kimon Boyakis earlier was with the theme unfolding of weaker global growth. How is that impacting asset allocation? And let's get your perspective.
We're definitely in for a period of slower growth globally. The developed world has got huge problems to work through. In Europe, the sovereign debt crisis, they need to be physically more austere, and even in America, there are a lot of problems with their fiscal position, and they will have to cut spending. So we are in for a period of slower growth. Having said that, we believe that equity markets are adequately reflecting that lower growth environment that we are entering, and asset prices are not priced for very high growth. So you are getting in at a very good valuation, and entry point is crucial in getting returns in future. So we are happy to have a full weighting exposure to equities currently. Bonds are not looking attractive at all, not globally, and with our bond market running the past couple of weeks, even our bond market is looking a bit expensive. So we prefer to hold equities as well in the global environment, where the S&P dividend yield is almost approximating the yield on the 10-year bond. Same situation in Germany. I mean, you don't get that opportunities that often, and you need to use that.